Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host to the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So this week I wanted to cover off retail as we head into the fourth quarter, but not just to show you some hot retail stocks. We'll find those for sure. But I think more importantly is my three favorite ways to shop for retail stocks. And that's really what we want to cover off, is how to find winners in this. And I think you'll find a couple of things really enlightening. So first of all, looking at the retail industry over this year, there's been some fantastic performers. And then how to look for opportunities. And I also want to point out when you have a stock that's working, you need to be aware when it stops working. And how do we do that? And I want to show some really good clues in here. And the reason I think that's important is you'll be amazed at how much things have changed from the previous time I looked at this industry group to now. So it's pretty important stuff. And if you're interested in gregschnell.com website, my Blue Jays are in the wild card spot here, or trying to run for the wild card spot. So I'm putting on a wild card membership sale, save $363 and get an annual membership at gregschnell.com/explore for just $497. That includes everything we do over there, and hopefully that'll be good. Also, thanks for watching. I appreciate the viewership, and if I can help at all, let me know. Okay, let's jump into the stocks. And what I want to show you first of all, this was a group of stocks that I had sorted on previously, and when I sort, I usually use the SCTR, the StockCharts technical ranking, to sort things. But what I want to point out is that if you look through all of these stocks, and they were the top 20 out of 170. What's interesting is this one has a scooter ranking of 16, meaning 84% or better than that. L Brands has held up there. It's now BBWI. Amazon's been good, but it's 63%. There's another 37% of the stocks outpacing it. Lakeland Industries, Superior Group. Look at how low these numbers are. Very few of them have stayed as top performers in since the last time I looked at this list. And so the idea today is, first of all, how to keep on top of what's a top performer, but also being aware that when it shifts, you really want to take the shift. So what's the difference between a stock with a scooter ranking of 92? Well, Lululemon looks like this. It's gone vertical, and it's doing really, really well. If we go look at Alpha Pro Tech, this stock was obviously a big winner early in 2021, and then became a dog for the rest of the year, and it's really been beaten down. And if we take VipShop, again, it was running up all the way into March, and now it's really a dog. So when the trend changes, you need to be aware of it, and don't get too hung up on staying with a long winner. Get more hung up on keeping the profits and rotating into the strongest stocks within the group. That would be a suggestion to try and help outperform. So with that, we need to get rid of these numbers because we want to find out what's the top performer now. And I mean, we can do that by clicking on percent change. And what happens is it's going to sort by the stocks that have been the best performers from the beginning of the year. Now you have other choices here, but I'm going to just use year to date. And here's Destination XL. Now, scooter ranking 99.8, it's one of the top stocks in the area. And even though some of these stocks are top performers, like here's Designer Brands up 61% this year, but its scooter ranking is down to 18. And when we go look at that, what we'll see is the stock has now started to decline. So what was a big winner for the first part of the year is now not a big winner. And I think we'd all just look at that chart and say, gee, when that trend line broke, I wish I would have sold. And it looks so easy, but of course we keep thinking they'll run on a little bit longer. Here's Cato, and it looks like it's testing the trend line right now. Here's Funko, already broke the trend line. So even just sorting on best to date this year, you would have had a lot more profit if you'd have sold this one at 25 instead of 17.5. So it looks, that's what we're trying to show. And so to get there, we need to get rid of this number on the front here. And this Destination XL was the 103rd stock on this list, and now it's number one for year to date. And that chart is just unbelievable. It's just gone ballistic. Here's Express. It's okay. It's up, 480% on the year. So it was an absolute dog at the turn of the year. It was at $1, and now it's at $5. Here's J. Jill. This one's had a really rocky start. It was 130th on the list, and then all of a sudden it's gone ballistic. Here's Naked. Went ballistic and now has crashed. Dillard's. So you see what I mean? These you could sort them any way you like, but the most important thing is what's working today. You want to go to the church or the mall of what's working today. And in order to do that, the scooter ranking can help us. So here's Dillard's, and we can see it still has a 98.9% ranking. So how do we get rid of these numbers on here, and how do we rank in a new order? Well, we go to the edit list, and then we just scroll to the very bottom. And what we see down here is select all, and we want to not delete the charts, but remove the numbers from these names. And so it'll just take the numbers off the front and leave everything else. So when we do that, now it's just alphabetical, and that probably isn't the way we want to sort it, but these are our only two choices. So what we need to do is go back to that summary page and decide how we're going to sort it. So if we were going to sort it on year-to-date gains, again, we'd have Destination XL at the top, and that would be our number one performer. Or we could use scooter ranking, and when we click on scooter ranking, we're going to get all of the top performers that are on the list. And the idea, again, is to try and be aware of what's working and what's changing. So there's two things: what has been working and what's starting to work. And so we can look at it a couple of different ways, but what I want to focus on is getting them sorted like this. Now, as soon as I go into this list and click on Destination XL, it's not, the next chart isn't necessarily going to be Dillard's or Jill or Crocs because I haven't locked in that sort order. So the way to do is to scroll all the way to the bottom and hit number in sorted order. And when I do that, that's going to put numbers in front. So again, those numbers that I had on the charts previously, you saw how some of them were great stocks and really doing strong work. And then all of a sudden, they were no longer the big winners that they were previously. Now, when we go look at this list, there's some great charts in here. We can also change from daily to weekly really quick. We could do a CandleGlance view, whatever we want. Once we have it set up in this sort order, we can just go look by 10 per page or CandleGlance. And CandleGlance, I did a show a couple of weeks ago explaining how to have quick changes between your CandleGlance. So this is obviously hard to see for everybody. So I could zoom in, but I've got CandleGlance going back to the beginning of the year, and this is the zoom panel just showing me what's happening lately. Here's Dillard's, same idea. And so CandleGlance is one way to do it, but at least you're looking at the strong stocks first. Now, if we go to the back end of this list, what are we going to find? We're going to find stocks mostly in downtrends. And so that's the difference between the StockCharts technical ranking, trying to figure out what's working and what's changing. Now, we need to figure out some clues on here in order to help us find when the stock is actually changing. So one thing could be a stock making a new 52-week high. It could be a stock making a new 1-month high, 3-month highs, whatever we like. 3-month highs, typically you're changing from some sort of a sideways channel to a breakout, or you're actually making a new uptrend. So all of those things can come into to help us. So here's light in the box, and we see a big downtrend here, and now it's starting to work its way higher, and the volume by price bars over here are saying the majority of price action is down in these bottom two layers. So there's some interested buyers starting to show up there, and the PPO momentum is starting to move into positive territory. So perhaps that's something we're looking for. Now we have this spike in the middle here, so it's not going to show us on 2-month highs or 3-month highs or whatever, but the scooter ranking is still weak. So I have two different places on a scooter ranking that I would like to look. And if you think about what makes what the scooter ranking is, it's a sports ranking for stocks in order of who's performing best right now. So the number of wins versus losses, or in the stock world, the bigger percentage gains versus bigger percentage losses. And companies making underperforming all the time compared to their peers are going to be pushing down, and they'll get a low scooter ranking, and the other ones are high. So there's two ways I like to look at it. And so I'm going to go get a chart. And on this chart, the big thing for me is if you have if they're big enough to have a scooter ranking, this one's only got a market cap of 179, so it's too small. Actually, it does have a scooter ranking, just got one. So let me just shrink the screen. I expanded it for looking at the CandleGlance. So once we have this screen set up, you can see this is really terrible. Full stochastic is really wound down. The stock history over a 5-year period really hasn't been doing much, but lately all of a sudden there's some volume showing up, more volume than ever before. Perhaps that's a reason to start looking at the stock, that something is changing. So one way to do it is obviously just go through and look at all the charts on CandleGlance and delete all the rest. The next approach might be by looking at the list. You can go in and we could sort just on summary, and we could look at stocks around the 75 level. And those are ones, so if you think of the market, really weak stocks are going to have a scooter ranking below 25%. Kind of middle of the road stocks are going to be between 25 and 75. And really strong stocks are going to be above 75. So the idea being, let's go look for stocks either moving from terrible into average or moving from average into great. And obviously, some people are going to be focused on values, so they're going to be down at the 25% ones, and others are going to be focused on growth and momentum, and they're going to be buying the ones breaking out to the upside. So those are different approaches to the market, and both can work. Let's just start here with Estee Lauder, because we kind of have it around 74%, and then Carter Holdings drops to 68. So we click on Estee Lauder, and we can see that the stock kind of goes between 30 and 70, and it's never really too great. The whole market's been in an uptrend for a year and a half. Estee Lauder's been good. It's worked really well. It's went from 150 to 350. So a really nice push. And so we can look around there and just kind of keep looking to see, as we go down the list, we could see stocks that are just below this, or we could go up the list. And here's LVMH. We can see the same thing. Scooter ranking's pretty good. Now, the purpose of this is not to just get so hung up on the scooter ranking, but in general, here's a stock with the scooter ranking holding up from 70. You can see it spiked up to 75, and then it went on a pretty big run. That wasn't a bad place to get on board and try to ride it out. Now, if it starts to fall below its 40-week moving average, that's traditionally not a great place to own the stock. So that would be one clue. But another clue would be it starts to underperform its peers. And not just peers in retail, but peers across the stock market. So I don't find the scooter ranking is a really good selling tool. I find it more of a tool to start looking for strong stocks. So in this case, I've got stocks that have been in an uptrend, and now they're starting to trend down. This isn't what I'm trying to find. I'm trying to find the ones that are down here and are starting to turn up and go past 75. That's more of what we're trying to find. So we can keep looking through these, or we can go through the view all process, which is to look at 10 per page. So this stock here, you can see it shot up. Scooter ranking above 75. It's up 2,400% year to date. That's a big mover. Here's Dillard's, and it's holding up above this 10-week moving average really nicely. That's been support. So one clue for us could be if it starts to drop under the 10-week moving average, perhaps the big run on the stock is done. We can see that the PPO momentum wave is still making higher highs. It's up around 20, which is really strong. But if it was starting to make lower momentum waves, that would probably be a clue. If it started to underperform the S&P 500, those would also be things that would help get us out of the stock. Here's Jill. And this stock's been trading sideways for 4 months, so I don't think that's kind of the right angle of attack. Crocs has been a giant winner again. When they first came out, they had this sort of a run, and they're back at it now. Here's Sears Holdings. I don't think that's a stock we want to look at. So, Signet Jewelers, this jewelry stuff has really been moving nicely. Again, the 10 week's been pretty good support. A couple of places now it's starting to wane. You just don't see the uptrend it had going. It's gone a little more sideways. Now, Costco's just been a beautiful stock. I hope you saw my article back in January, February, where I said, is this the 52-week low for Costco? Because I think it was within days of it. And it's been a rock and roll stock since then, 300 to 450. Marks and Spencer, this one's just breaking out to new highs. Scooter ranking pushing above 75. The real problem with the stock is it hasn't done much for years. So even if it started to get going, is it going to get all the way to $6? I don't know. Lululemon, that's just a beautiful chart, and it just had a 12% move or 10% move this week. That's just an awesome run. That's the kind of stock we're trying to find. Its scooter ranking just moved back up. It's breaking out of a base. What's not to like? So this 400 area has been kind of resistance all the way through here for almost a year, and now it looks like it's ready to break out and start its run again. That looks really good to me. Here's Bath and Body Works, and you can see the scooter ranking's been strong for a while. It's still strong. It could keep running. Nothing wrong with that. But again, the idea here is to try and pick something to help you find good, strong stocks. So here's Liquidity Services. And again, we're getting worse here in terms of scooter ranking. That doesn't mean that they were strong in the past and are getting worse. It just means we've ranked them based on the value today only. So here's Movado Group, and you can see there's a downslope in momentum here. Stock's pretty much sideways. I'd be cautious on this just because momentum is really starting to wane compared to what it was. Genesco, horizontal top so far in price. PPO momentum is kind of waning. Unless the stock finds a catalyst to start to turn higher, I don't think we want to buy something going sideways. Here's Shoe Carnival, and somehow those always seem to get bought. This is a nice big uptrend here. We're starting to see the full stow come down and weaken, kind of pointing out that the stock isn't as strong as it has been. So at least by sorting through this, we get a chance to look at some strong stocks. Now, again, I talked about the ones around 75. Well, here's Scooter ranking at 84. So it's doing okay. And again, this is kind of comparing the percentage moves over periods of time. Here's Gildan Activewear, trying to break through prior highs, 39.44. It's at 40.27 right here. Pretty important resistance. We saw that on Lululemon, just sat there for almost a year and didn't go anywhere. Now it looks like it's breaking out. Here's Unicharm Corp. This one's the kind of chart I like, actually, where it had been strong, came down, and is starting to resurge or rejuvenate itself. PPO moving above zero. Not a lot of volume hitting the stock. It was pretty light. On a whole week, it only sold 275,000 shares traded hands, so that's kind of hard. It's a mid cap. But it does seem to be having the right trend angle to it, so I like that. It's at new 5 or 6 month highs in relative strength. Stock looks perky. If we go look, well, I could just bring it up on a different page here. Ticker symbol UNICY. Okay, so that's what it looks like on a daily. To me, the chart is too thin. Like when you see weird candles like this, it just means there's not enough volume trading it, and you're probably better off just finding something else. So if you had to sell it, you could. Here's L'Oreal moving up nicely, nothing wrong with the stock. For me, there's a couple of things here. I want to make sure that this uptrend and momentum holds. I don't want to start to see it making lower lows. Target, really nice move up. This is just starting to go below its 10-week moving average, so we have to keep an eye on it and just see. It's already made fantastic gains from 100 to 280, or 260. Is it really the kind of stock that could double again? And it might be, but my main point would be, if it's starting to go back below the 10-week, perhaps you want to let it just stay there until it moves back above and then pick it up for the next run. Okay, so again, using a couple of different tools, we can start to see this. Now let's go down and look at some of the stocks down around 30 or 40. Here's one, 28%. So these ones are actually starting to let go, and that's really the opposite of what we want, right? We want to find something more like this, where it's been down and out and all of a sudden it starts to get some momentum. If we could have bought it in here at 20 bucks, it went to 60. You can get by on that. Here's Vince Holdings. Places in here where the scooter ranking goes flatline like that, it ended up that the market cap either got too small or the stock itself was unable to, didn't meet one of the other criteria. So just be careful. If there's a scooter ranking line like that, it's just for the calculation of stock charts. It's not like it had a perfectly smooth run. Now, again, this stock is just pulling back here. Hasn't done anything for 5 years, probably not what we're trying to buy. Foot Locker, big seller of Nike. You got a downtrend here. The uptrend has clearly broke. It's falling below the 40-week moving average. That isn't the day I want to pick up Foot Locker. I probably want to wait for somebody else to find and build a base and then have it start to move back up. Unilever, going sideways here. This is just a giant products company like Procter & Gamble. Nothing really going on in the stock. $52 back in 2017, $55 now. That doesn't sound like much of an uptrend. Here's Zoomies. Was on a big uptrend, but you can see the scooter ranking progressively getting worse. So I don't find anything in there that I really like. Again, you have to go find the type of stock shape you want. But the big thing for me is trying to use these tools, first of all, sorting and seeing how much those other stocks had changed, and now they're starting to deteriorate from being in big uptrends to downtrends. And do you really want to hold it that long, kind of living on its former glory, or do you want to keep changing? So here's Wolverine Worldwide. To me, this uptrend is broken. It's now making a lower high. It's falling below the 40-week moving average. PPO is breaking down. It's going below zero. That isn't the chart shape we're looking for. Here's Culp. Big rounded top here. The stock was in decline for years. I think I'd just let somebody else let it decline with them. Fast Retailing, same thing, breaking lower. Nothing really going on. Now, it did have a nice move here in the last couple of weeks. But again, you've been in a downtrend for almost 6 months. Do you want to buy it on the first bit up? Probably not. So let's give it a chance to kind of base in here. And if it starts to make 3-month highs, maybe that's more interesting. If you're a value shopper. Here's Tapestry, and you can just see that this stock is now, the 10-week is starting to move below the 40-week. The momentum seems to be gone. Scooter ranking was really strong. It's now rolling over. That isn't the one that I want to see. That's not the name we're looking for. Looking at Gaia, Gaia, nothing going on in the stock, so I think we just ignore it. Again, these tools, either looking at them through the sort order or year to date, whatever ranking you want to use, I think it's important to just make sure that on the charts that you look at, you're trying to sort them in the order you want. And it might be by industry group, so you can always add those other columns. If it's a different industry, you want footwear or whatever, Steve Madden you're trying to find. Any of those angles are worthy. I think the biggest thing to be aware of, what I really want to point out, is how different, if we sort on percentage change on the year, how different the stocks got on their scooter ranking, and a lot of them dropped off quite considerably from their highs when we go look at the charts. So try and be aware of that. This one's actually a good one for me to talk about a little bit. One of the reasons that this chart is interesting is it was in a big uptrend. It started to break that uptrend. It really has done nothing since. Okay. So if we use this one, probably not my favorite choice of places to pick on the line, but let's just say we did. Now all of a sudden it's starting to break below that for the first time. There's also, a horizontal level here that if it starts to fall below, some people will say, well, then I want out. Well, it's 107 here. It's 70 down here. How far do you want to let it drop before you're actually making that call? I think all of the indicators are starting to change here, where the scooter ranking starting to, first of all, it wobbled and then it dropped hard. The full stochastic is down at the 20 level. Some people may say, well, that's just getting ready for a buy. Well, one of the things you'll find is it can wobble below 20 or between 20 and 50 for a while. And if it doesn't eventually break out to the upside, that's a problem. You're stuck in a dead stock. I think at this point, having it broke the uptrend, it hasn't done much for months. This stock isn't one I want to own, but just need to do some simple technical analysis there. I would just say the scooter ranking starting to break down, full stochastic breaking down, doesn't mean it's a place I want to get involved. I want to be either more in the bottom where the scooter ranking starting to break out to the top, or more where it was just kind of hovering in this 50 to 75 level and then starts to get better. And you can see it was a nice 6-month run and a good place to get on board. Okay, so last thing on here. So when you have this scooter ranking, one thing to be aware of is, let's say you have a default chart that's like this, or you want a daily chart, and you want to change the whole group. What you do is you go down here to apply style to all and click on that. And now that's going to change every chart in the group. I'll just flip through a few of them to that same style. And so it will change the number of days. It'll wipe out all your annotations, all that kind of stuff. So if you don't want to do that, then you have to copy it and make a new list with it. To make a new list, you would edit and you would go to the very bottom of the page, and you'd create a new list at the top, call it new list, and then you'd go to the bottom of this edit page, and you would select all, and then you would copy to, and whatever, you'd select your chart list that you want to put them in, and you'd dump them in there. So the idea should be that you have lots of flexibility in how you do this, and you don't want to be hung up on one sort order over and over and over. Things come and go out of strong areas or areas of weakness. They improve, and you need to be on top of them as they change. So feel free to always be changing the sort order to help you make some money. Okay, so lastly, let me just go back a couple of pages. I think the big opportunities, a lot of them are going to start breaking down here, but as we head into the fourth quarter, we should see some nice ones like Costco and Lululemon, and those types of names should head on. If you're interested in anything GregSchnell.com has to offer, feel free to head over there and use GregSchnell.com/explore. Thanks for taking the time to join me in Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV or the StockCharts on demand. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.